Over the past 2 centuries, the societies of our modern world have consciously or unconsciously evolved to live with the principles of some school of thought. We identify ourselves as capitalists, socialists, communists, or sometimes a hybrid of these philosophies and more. In essence, the origin story of these concepts was to bring about the best practices to optimize human societal structures. But sometimes there emerges a force from within these systems, a force which is so powerful that eventually it not only pervades every existing system, but also starts shaping societal structures themselves. The establishment we're talking about today is one of those universal forces that directly or indirectly affects all of our lives. But what if I told you that it is you and I who are responsible for the rise of this behemoth, and that no matter how hard we try, it's practically impossible to cut ties with it? In the financial collapse of 2008, the world was reintroduced to the concept of companies which are too big to fail. Companies like Goldman Sachs, Fannie Mae, Freddie Mac, and AIG. They received insane bailout sums from the government in order to get back on their feet. To bring this plan to fruition though, the government hired an establishment to analyze whom to bail out and whom to cull, a firm by the name of BlackRock. This company was awarded these key tenders for the cleanup by the US government with no competitive bidding, in a process enveloped in secrecy. Washington basically awarded these bailout contracts to Larry Fink, who happens to be the chairman and CEO of BlackRock, and also one of the key mediators between the White House and Wall Street. He was responsible for bailing out the same companies or banks in which BlackRock already had a stake, which cemented his dominance on Wall Street post the crisis. Fast forward to now and the pandemic, when the Federal Reserve decided that liquidity was the need of the hour for sinking corporations that had too much debt. Who do you think they chose to hire to manage and buy corporate bonds? You guessed it, they went right back to BlackRock. The year 2008 made Fink the most powerful person in the post-bailout economy, and now arguably the most powerful businessman in the post-pandemic economy as well. The most insane thing though is that unless you come from a finance background, the chances are that you might not even have heard of BlackRock or Larry Fink. But that is not by accident, it's by design. Over 33 years, Fink has built BlackRock in stealth by making sure most of its operations aren't in the public eye. In recent times, even when BlackRock was outbidding and outbuying single-family homes in the US, there was barely any press around it. Today, the majority of the banks in the US are owned and controlled by BlackRock. Not just that, BlackRock also owns some of the most prominent pharmaceuticals and mainstream media houses in the country too. The company is so influential that its assets under management are larger than the GDP of almost every country in the world, with over $9 trillion. BlackRock's services and holdings include several sovereign wealth funds, central banks, college endowments, wealth funds, retirement accounts for everyday average folk in the form of pension funds, Fortune 500 companies, and millions of individual investors. This giant is a stakeholder in some of the largest publicly traded companies like Microsoft, Apple, Facebook, Wells Fargo, and Chase. BlackRock is a $1 trillion company with stakes in multiple other $1 trillion companies. For some perspective on how huge BlackRock really is, know that 300 of the top pension funds of the world hold a collective of $6 trillion in assets under management. The only company which comes even close to BlackRock's size is Vanguard with $7.1 trillion. If we combine the collective assets under management of the top 3 asset management firms, which are BlackRock, State Street, and Vanguard, we're looking at a whopping $15 trillion, which is give or take 70% of the United States' GDP. Larry Fink has achieved all of this while keeping an extremely docile public image of himself and his company, to the point where you probably didn't even recognize him in the thumbnail of this video. He is the godfather of finance. He makes sure that his company has a piece of every top tier deal anywhere in the world. As William Cohen, former investment banker and the author of House of Cards, would put it, Fink is the man behind the curtain. In an interview with BlackRock, Fink was asked if he's the most powerful man in finance. The man in charge of $9 trillion instantly downplayed the sentiment by saying, "I don't think of myself as powerful." So does BlackRock really own the world? The answer begins with the origin of the man who always wanted more than he had, Larry Fink. Now, Fink is largely recognized as one of the preeminent financial titans of our time, but his beginnings are significantly more humble. His father had a shoe store while his mother taught English. Fink earned a BA in political science and an MBA in real estate from the University of California. At the age of 24, he began his career on Wall Street, where he was just another LA lad trying to make a name for himself in the world of finance. He joined First Boston on a $20,000 salary scale, but it didn't take long before his managers noticed his dedication and skill, and soon enough, he was groomed to become the CEO. 3 years after joining First Boston, he was named head of generating and constructing mortgage-backed securities. Fink's efforts helped increase earnings by $1 million, and his renown grew on Wall Street. Soon, he was spearheading some of the largest deals, including the $4.6 billion GMC vehicle loan securitization. At the age of 27, he became the company's youngest ever CEO. Now, trading desks all throughout the United States had computers by 1983. They were used for the first time to generate numbers for calculations. It was still in its early stages, but it was exceedingly quick and convenient. Then, 3 years later, something that would change Fink's life forever happened. In the second quarter of 1986, the financial staff of First Boston made a severe mistake. The Treasury Department expected that interest rates would rise, but the opposite occurred. Fink was in charge of the deal when their client lost $100 million due to their blunder. Everyone was aware of the mistake, and due to the public humiliation of the company, Fink was fired. He was embarrassed and defeated. What's worse is that he wasn't even to blame. His estimations were based on data from the back end, but due to a technological fault, they didn't turn out as expected. Fink was perplexed. He couldn't get his mind off the wealth he'd supposedly squandered, but after determining what went wrong, Fink came up with a plan. Nobody expected him to rise from the ashes and create the world's largest management firm. According to his friends, he felt obliged to redeem himself and prove his own worth, and so he took the chance to carve a legacy out for himself. In 1988, Larry Fink and 7 of his peers created BlackRock in a single room with a $5 million bank loan. One of his first clients was the FDIC, the Federal Deposit Insurance Corporation. It was at this point that the savings and loan crisis began, bringing the entire financial industry to the brink of collapse, but the FDIC hired Fink's BlackRock to handle the risky assets after the government took control. But BlackRock was working on a technology tailored to Fink's style, something named Aladdin, that would prove in time to be state-of-the-art. BlackRock managed $9 billion in 1991. They went on to manage $17 billion by 1992 and $53 billion by 1994. Those early years would cement the foundation for BlackRock's meteoric rise to come. In 1995, PNC Financial Services Group purchased a share in BlackRock for $240 million. Some argued that the move was unnecessary because BlackRock was just selling a piece of its business. Fink, on the other hand, was well aware that he was about to embark on a difficult climb. With the next offering, BlackRock was about to change everything. In the 1990s, BlackRock's association with PNC offered a constant stream of retail clients to support its institutional clientele, which accounted for around 80% of their assets under management. Building on this, BlackRock presented a risk evaluation and risk management system that includes 5,000 computers that run 24 hours a day, 7 days a week, and are overseen by a team of engineers, mathematicians, and developers. BlackRock's Aladdin could track millions of daily transactions and evaluate each asset in his clients' stock portfolios to see how they might be affected by even the most minor economic changes. The system was actively monitoring the markets for anything that may go wrong, and it would serve as the foundation for a second organization that would broaden BlackRock's purview beyond asset management to include customer service. With a well-balanced portfolio, BlackRock became a publicly traded firm in 1999. Retail investors, though, were skeptical of their new technology, which caused BlackRock to have the worst IPO of that month. With time, though, the market learned that despite being the cheapest stock on offer, BlackRock was sticking to its promises to investors. Over 12 years of consistent expansion, Fink chose to rely on the strength of acquisitions. Before the end of the year, BlackRock had offices in Sydney, Singapore, London, and Munich. In 2008, Fink was en route to Singapore. Back in the United States, though, Lehman Brothers had just crashed. This prompted Fink to return to the US the following morning. The financial sector had just changed forever. That is hitting the fan, you've got to do something. He'd call lawmakers and tell them. During the financial crisis, the Federal Reserve Board of New York appointed Fink to supervise a $30 billion portfolio of Bear Stearns' assets. When the central bank failed to analyze the market conditions, the next best alternative was to deploy the powerful Aladdin suite, which was already utilized by investors and banks. When the market was collapsing, Aladdin was on the rise and continued to flourish by attracting new customers, eventually becoming the go-to analytics solution in times of economic uncertainty. Now was the time for redemption. Think, once disgraced, had come to save the country from financial ruin. After that, the exorbitant purchases continued. BlackRock paid $1.3 billion for eFront in 2009 and $13.5 billion for Barclays Global Investors later that same year. As a result of those acquisitions, BlackRock became the nation's largest asset manager. Fink immediately recognized the benefits of technology when applied effectively. He was named one of the best CEOs in the world 14 years in a row. Fink had successfully risen to the summit of the industry that had once thrown him aside. But there was something more, a second inflection point that came during the pandemic, when the Federal Reserve employed BlackRock to bail out corporations that were struggling with poor liquidity and high debt. In a way, BlackRock has grown to become the right hand of central banks around the world in times of crisis. So what does this mean for the company and the man that has the world at his fingertips? What does BlackRock have up its sleeve for the future? Well, as Fink kept growing more and more powerful, in 2019, the people and the press started giving BlackRock a lot of flack for being among the top shareholders in prominent oil and coal companies, the worst polluters on Earth. The blemishes on BlackRock's portfolio were on every headline, throwing Fink back into the negative eye of the media. But Fink is a man who hears the pulse of the world. According to him, BlackRock is making a shift towards something known as ESG investing. Now, ESG stands for environmental, social, and corporate governance. This would mean that investments in all companies henceforth would need clearance on environmental norms and sustainable scientific vision. Now, whether or not they truly believe in a vision like this is a different matter altogether, but this helped neutralize the critics in the media and actually became the new norm among other asset management companies. From the looks of it, it feels like BlackRock has taken some serious steps in this direction by partnering with activist investors, setting aside grants for sustainable projects, and backing a shareholder resolution to get ExxonMobil to get serious about climate change. Larry Fink even went as far as to write a letter to his existing portfolio companies, urging them to make contributions to society in order to continue receiving BlackRock's support. This new initiative by BlackRock is the reason we see every other company stressing to either change the way they operate or at least pretend as though they care. Finance is changing. Now we have things like green bonds and syndicates of sustainable investors that primarily focus on scouting for companies that fit the ESG bill. But ESG has recently started coming under fire as well. It's been alleged that it's merely a shroud with which the rich and powerful use to hide their evil doings. They slap a gay pride flag on their logo once a year and pledge to plant 1 million trees, and suddenly everyone forgets about their moves for world domination. There's no question about the strength and reach of BlackRock in the world today. 30 years ago, when Larry Fink first lost that $100 million, he was bruised but not defeated. He nurtures that same fire in his belly even today. Whether or not BlackRock is righteous in its ways has remained a subject of debate for years, but despite its size, it continues to evolve with time. The force of BlackRock isn't only silently changing the norms in the financial world, it's changing everything from consumer products to technology and medicine. On a fundamental level, the question remains the same. Should an establishment be allowed to grow so powerful that it can control the entire world? Do we rely on the benevolence of a few to guide our children's future? My guess is that in the coming decades, the answer to this question will be written by BlackRock and the few others that inhabit the ivory towers that loom above us. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week.